It's where we talk about stocks and crypto. Okay. Oh yeah, we gotta turn on the music. All right. Okay. So good morning. Welcome to Hoodl. Morning. Welcome to Hoodl. This is hold on opportunity for dear life. Team Hoodl. Time, energy, money, emotions. Hoodl. Hold on opportunity for dear life. Where we talk about stocks and cryptocurrencies on a technical analysis basis. We look at the charts, look for similarities, patterns, entry and exit points. Okay? We're at all-time highs all across the board. Today is Friday, August 13th, 2021, 8/13/21. Okay? Now anyone familiar with the Fibonacci sequence, we have those numbers are in the Fibonacci sequence. 8/13/21. It goes 0, 1, 1, 2, 3, 5, 8, 13, 21. Okay, so we have 8/13/21. That is today. Today is the Fibonacci day of August 2021. 8/13/21. And we are at all-time highs all across the market. Okay, your S&P 500 index 446. NASDAQ 100, way up here, okay, 360. Your Russell 3000 is up at above the 2618. We're at 2646, okay? And your Dow Jones Industrial is just killing it up here. 35,500. We're up, going up. All-time highs. Okay. Why do we still expect to be moving forward? Well, stocks can go a lot higher than you think they can go, for one. Money supply is at all-time highs. People have more money in their bank accounts than they've ever had before. Spending is up, so people are looking to put their money in places, right? That money is going to make its way to stocks. There's 401k plans happening where employers are offering their employees better 401k plans, right? Stock incentives. There's acquisitions happening where people are being offered stock and they're locked up situations. They can't sell them for a long time. Right, and we're not seeing signs of any downward momentum until we see a huge red candle on this weekly chart. Okay, this is from Corona drop on the top 500 stocks in the U.S. stock market, the S&P 500. 100% increase from your Corona drop. Okay, and until we start seeing moves to these moving averages, we don't see signs of any downward momentum. Okay, now our MACD made a high up here. Ironically, we went over the 161.8 of a Fibonacci price, right? Or level on the MACD 162. I'm talking about these numbers over here. So we're up here at this high level where we made this high over here. We made a higher high, and your weekly is lower than over here. So this could be signs that we would see something to the downside, but your MACD is up here, and if we run up, we make a high, and we make another high, and our RSI goes lower, then that would give you signs that we'd be seeing movements to the downside when we're up here. But this is clear, just buying, clear straight buying. The government's printing money where the Fed is buying mortgage-backed securities. Pumping money into the real estate market, which pours over to the stock market. I'm not saying that all that money is going into the stock market, but banks are eligible to borrow more money. Investment banks are eligible to borrow more money to put into the stock market, right? Futures are at all-time high. Your S&P 500 futures on your weekly chart is up at an all-time high. Okay, your the NASDAQ 100 is in your upper range of an all-time high. The VIX is the volatility, the measurement on how volatile the S&P 500 is going to be, or is pretty low right now, which is good signs, right? We could see that this starts to move up when the daily comes down and makes a low down here, but we'd have to see. This is a trend of a downward trend, okay, where we could come down here and meet these previous levels of December 2019 before we started getting heavy volume volatility started picking up crazy, right? Panic selling during coronavirus. So we are at all-time highs all across the market. you know, at any one of these all-time highs, you could have been, okay, so I'm going to enter in a short position at any time, at any one of these, right? And you would have failed every single time. That's why time is in the market is more important than timing the market, especially as an individual investor or a retail investor or a small fund manager. So Apple stock, the most profitable company in the world, okay? We're currently riding this golden apple trade. We're calling it the golden apple trade, remember? This is your daily chart on Apple. We had your, before July's all-time high, your previous all-time high was 145.29, and the low from that was 116.22. So when you do a Fibonacci retrace from your high to low, so these green horizontal lines, the 161.8 Fibonacci extension, which is a common extension for stocks to reach when they break out of a trading range. They tend to reach in this upper, I like to call it the upper golden section, the Fibonacci extensions. And that, the 161.8% is at 163.26, right? $163.26, which is very, very close to $161.80, which would be 161, you know, it's just ironic that 161.8% is very, very close, almost equal to the dollar amount, right? It doesn't have to be exact just because these numbers, I'm talking about these numbers right here. Just because it's not exact doesn't mean that we're not going to go up there. I mean, it can be, if this number was like, you know, 208 or 202, and this was 161.8%, then that wouldn't be very ironic, right? But this, so, you know, that's one factor that we're calling this the golden apple trade. Now, these green horizontal lines are your Fibonacci extensions from your recent all-time high in January. Okay, the red is the Corona previous all-time high from the Corona drop to the low of the Corona crash. So would you draw your high to your low? So the red horizontal lines are your Fibonacci from Corona, okay? And where did we run up to? Well, from the Corona drop, look where Apple stock, Apple, AAPL, Apple stock ran all the way up to the 161.8% Fibonacci extension at $99. And it bounced in between the upper golden section, between 127.2% and 161.8%. Okay, it bounced up there and it just took off. And it ran past the 261.8. Okay? Now, another factor that we're looking at is the 361.8 Fibonacci extension, golden ratio extension. The price is at 157, which is very, very close to 161. So we're up here in this upper range up here. This is our upper price target, this Fibonacci extension, okay? Apple, it ran past the 261.8 back here, and it came back down. So if that pattern continues, it would run past the 361.8, which lines up at your 141.4, which is in this golden upper extension from your recent all-time high of January. Okay, this is fractal. These are fractals happening in the stock market, okay? Fibonacci fractals on the golden apple trade, okay? Okay, the golden apple, like golden apple snails. If we take a look at a picture of a golden apple snail. Okay. These are called golden apple snails. And their shell is a Fibonacci spiral. So if you plot the numbers of the Fibonacci sequence on, you know, geometrically, here's what you get. 13, 21. Now that we're talking about the area, so we have 1 by 1, and we have 1 by 1. Okay, here we have 2 by 2, 3 by 3, 5, 8, 13, 21. The Fibonacci sequence, you just add the previous number. So if you start with 0 and you add, well, you have to add something, right? So we add one hole, you get 1. And then if you add 1 to 0, you can still get 1. So it's 0, 1, 1, 2. 2 plus 1 is 3. Right? 1 plus 1 is 2. 2 plus 1 is 3. 3 plus 2 is 5. 5 plus 3 is 8. 8 plus 5 is 13. 13 plus 21 is 34. And it continues on that, you know, for infinite. And the higher those numbers get, the closer the ratio. When you divide two numbers by each other, so 21 divided by 13, that number gets closer and closer to the golden mean ratio, 1.618, right? 0.618, okay. And today is August 13th, 2021, 8/13/21. And we're looking at Apple stock, the golden apple trade on Apple stock. Okay, so when our price targets are up here, okay? Now, this isn't financial advice. I'm not a financial advisor. we're just going off of common phenomena that happens in the stock market, that professionals use, that not a lot of new retail investors are looking at, right? These orange levels are from your 2019 crash, right? Right before we took off again in 2019, where you have a V-shaped recovery. So your all-time high of 2018, October 2018, to your low of January. So the orange are these levels. And where did Apple stock run up to? Well, it ran up to the golden upper fib extension to 200%, and then came to crash to 78.6%. And it broke the chart. Okay, we ran all the way up to the past 461.8 fib extension, and then we came back down a little bit to your 361.8. So this is your upper fib extensions from 2019. And we came up here in this upper range, and we come up and we are forming a bullish flag, right? So where you have a huge flagpole, a huge increase in price, you make a sideways downward trend, and then you take off again. That is what it looks like is happening on Apple, where you have a huge run up in price. So this is your flagpole. You trade sideways in a slightly downward trend, and then you break out and we take off. So this candle was yesterday, which was a really good confirmation that this pattern is on, looking towards the breakout. And pre-market, Apple is still up, right? 148.93. We have not seen any downward movements in Apple today. So today we do want to look for signs that this is going to continue. Now, just because it breaks out, like let's say today it does break out and we hit this fib extension of from a Corona. So if we hit, this would be our first price target. It could run up here and then dump some more down here before we consolidate and see higher prices swing on up to that $162 price target. So definitely we want to look today on Friday, the end of the week of a trading week, okay, for confirmation that Apple is going to continue with moves to the upside. So we're calling it, so this is the golden Apple trade on Apple, right? So our upper price target is at 162. And this could run up past it and then come back down and be in this trading range for a while. Like kind of like vibrating strings, becoming in tune with each other, or a trill in music, a trill. So that is your golden Apple trade on Apple stock, okay? GRWG had a great earnings report where they're reporting record earnings. Growth of 190% year over year. That's huge growth, okay? Their e-commerce revenue increased 263% from 3 million to 12 million. They just started their e-commerce, so they have lots of room to grow on their e-commerce for the hydroponic industry. But what happened to the stock? The stock crashed. Boom. Okay, we were at 43, and it dropped all the way to your low of the day from yesterday was 34.41, and then we bounced up. We're currently pre-market sitting right around $36, okay? Well, what happened? Okay, there was a huge bear flag on GRWG that we were aware about. That's why we take position sizing so important. We don't go all in with our entire portfolio in any one trade. And if we were to have done that, we'd be sunk, right? From here to here, that's a pretty big drop. So we had a huge bear flag where it's the opposite of the bullish flag where we saw an Apple. We had a huge downward price trend, and then you start forming a slightly upward trend, a flag this way, and then you dump again. So the bearish flag did play out on GRWG, where traders and investors, they felt that they wanted to exit their trade. They did not care what price that their trades settled at, so they exited the trades as soon as possible. And it also triggered limit orders where people bought in between up in this range, and they set limit orders for down here, let's say, and then your limit order gets filled. So someone will come in and sweep up all the limit orders on the market. Someone could come in with a large amount of capital and say to their broker, okay, what are all the limit orders? I want to sweep them all up, right? There's also shorting, okay? GRWG had a huge increase in short volume yesterday, where August 11th, there was 227,000 shares short volume. This is FINRA data. So there is there are more shares out there being shorted, but this is the larger number, the majority of the shares that you can see. Okay, so on August 11th, there's 227th. Yesterday, there's 2.7 million shares being shorted. So, people, a fund or maybe one or two funds or somebody is coming in with heavy short volume and borrowed lots of shares and sold them short. Okay? And that causes a price to drop because they sell the shares short. So a buyer would agree to buy at the lower price. And that happens over and over again where buyers are coming in and they want to buy at a lower price, right? So that can cause the price to go down where they're buying at a lower price because they're getting a good price, those buyers. And the sellers are selling it lower because they want to exit the trade or they're short sellers, right? So that causes the price to go down as well. So there's always an equal amount of buyers and sellers. There could be one seller and 10 buyers, but the one seller is selling enough orders to the 10 buyers. So, does that make sense? So one seller could sell to 10 buyers, but there's still going to be the same amount of buy and sell orders between one seller and 10 buyers. So there's always the same amount of sell orders to buy orders, as long as the orders execute. So whatever volume is, so whatever your volume was yesterday, there's equal number to buyers and sellers, but both parties agreed at lower prices. When you have bull markets, when prices increase, sellers are selling at higher prices, taking profits. Buyers are buying at higher prices because they're expecting higher prices in the future. So they're buying at higher prices. Okay, they could buy it. They could have limit orders set on breakouts where you have a run up and like right here, let's say a fund comes in and they say, okay, if it breaks out of between 37, if it breaks this previous all-time high, we'll just make an easy one. If it breaks this previous all-time high of 37.25, let's set a limit order where we're going to buy at 37.30. So the price increases. It gets to 37.30. They buy, which increases the price more, and that continues to happen. Buyers come in and they buy at higher prices, and sellers are selling at higher prices. Whereas over here, buyers are buying at lower prices, and sellers are selling at lower prices. Now, when Grow Generation has these dumps like this is a huge gap down. So gaps tend to fill. We could see this gap fill before we see either further movement to the downside, or we have confirmation that this would be our bottom. Okay, we did think that this was a low over here at 35.91, where this was going to be a third low, and we continue on this uptrend. But now we can say that this is our third low. So we have this low of a 33.41 back in March of 2021. This is Grow Generation, right? We're just looking at the stock chart. So if we have your all-time high from February, 67.92, 67.82, up in that almost $68 to so a 50% crash, okay, to 33%, or $33, sorry. And we've been bouncing in this range for quite some time, for a few months now, where you have a low of 33 and your high of 56, 57, 58. Now, if this breaks below our low, okay, we're looking for signs that we're going to be continuing, that it would wear out at some point. And one of those is a huge bullish harmonic on a very large time frame back from your November range, when we had that first run up, when our first breakout, okay, between 22 and 13. We had a huge run from there up to your high of 68, and if we draw a huge bullish harmonic where we have a 127% retrace right here, or 1.2, right? If it was 120, so it would we would be looking for a low of 26, okay. But Grow Generation tends, when it so far, when it's had these big sell-offs like this, it doesn't stay down there very long. It tends to bounce back up quite quickly, okay? Okay, we had this crash, boom, bounce back up, boom, bounce back up, boom, bounce back up, boom. This is where you had the bear flag, okay? Where you have a huge flagpole. This is your flag right here, where it looks like a flag. It's going down, and then it crashes, boom. And that's what happened. So this chart is just a 30-minute chart, and if we look on that, we're very oversold on the 30-minute chart. So this could be another bear flag where it comes down, we make some price movements upwards, and it crashes again, and then we show bullish divergence where the RSI remains higher or makes a lower or higher low, but your price made a lower low. So then that would be confirmation that we're gonna swing back to the upside. So we want to watch for this today. Okay, now just because Grow Generation reported record earnings, okay, they reported record earnings in last year. Okay, 48% increase, surprise of their earnings back in this August huge run up. Okay, and they took off. And here they report record earnings again, and we're crashing. So just because earnings are good doesn't always mean that the stock price is going to just continue to go up. Traders can be reevaluating their take on the company, what they think the company is worth. Okay, short sellers are also, could be greed happening where short sellers are selling this short, triggering other orders to go, triggering you to sell, and they hope that you continue to sell so they can buy lower. They can take your shares away from you, return the shares that they borrowed, take your shares away from you, and then increase the price, hoping that you're going to buy back in at a higher price. Because if you're in now, if you like the company now, when it increases, you're going to like it more, right? So emotions and psychology are a huge part in investing and trading. So we're looking today for confirmation on what GRWG is going to do. And on the Fibonacci time zone, a Fibonacci time intervals on GRWG from your all-time high. If we go high to low, if we go 0 to 1, 0 would be high and your low would be 1 if we just make it simple like that. From your all-time high, 67.9 to your low, 33, this 50% crash. Fibonacci time sequence, 0 to 1, so these yellow vertical lines. 0, 1, we get the low. 2, we get the area of another low. 3, we get the area of this low where this was a bear flag, another bear flag, and we continue downward. 5, 0, 1, 2, 3, 5. Remember, this is the Fibonacci sequence on the time zone. And we just really get some, just general sideways trading, okay? Didn't really move much between 5 and just before 8. Okay, it was at 43. It went down, it went up, and then it kind of remained at 43. And we're at 8. And it's ironic that the 8th interval, the 8th number on the Fibonacci sequence on the Fibonacci time zone, is today at 8/13/21, right? On a Friday, August 8th. Today's the 13th, 21, right? So your Fibonacci sequence, 0, 1, 1, 2, 3, 5, 8, 13. So this very well could be just just your third low, where traders start to increase the price again, or we see bigger movements to the downside, and that's what we're going to look for. So long term, we're very bullish on GRWG on the company. Okay, 3 to 7 years. Okay, we're very bullish on it, even longer than that, even longer than 7 years. So we're not too worried about our position now. Our short term position, we're looking for prices, higher prices, movements to the upside. If it continues, we're most likely exit our short term positions, cut the losses short on those, and reevaluate the trade. Okay. So keep your eyes peeled on GRWG. We are below the 200-day moving average, so this could be a good entry point in between 36 and 34. It's ironic that the price dipped to 34, which is your Fibonacci extensions. You have one at 341, right? And your upper one is 361. And right now the GRWG's price is between 34 and 36. So this could be a good entry point. Now that doesn't mean run out and hurry up and buy GRWG stock right now just because it's right here. This could go down lower. You could get a better price down here. Or we could have this V-shape, another V-shape recovery where it's going to come up and fill this gap again. So we're looking at GRWG definitely today. Signs that that's going to continue on. Coinbase is we had a nice run up, okay, to 293, which was what? The 38.2% retrace, right? Which is the bottom of this golden section. Remember, the golden section is between 38.2 and 61.8% of a recent all-time high to low. So your recent all-time high was up at 430, close to 432, and your low was 208, right? 207.69. And we bounced between the 23.6% and 0 3 times. 1, 2, 3. Ran up. Made kind of a cup and handle pattern. There's a little bit of a handle over here. And then we took off up to the 38.2 and down to the... So we ran up and down. Boom, down again. So this could be a trading range. And we make a trend to the upside. This is the hourly chart. And your moving averages are moving to the upside, which is good. So we can make movements... We can see movements all the way up to 345 before we see another spike down, to 320 or 300. Now, this is tied with cryptocurrency, the crypto market. Coinbase offers the tools to buy all, not all, but a majority, a very large amount of cryptocurrencies like Bitcoin, Ethereum, Hedera, Dogecoin, lots, and hundreds of other coins out there. And they make money when you buy and sell cryptocurrencies. They make transaction fees and miners fees. And it's all, so it is volatile. So we can have heavy movements to the upside and large movements to the downside. So when it IPO'd, cryptocurrency was very high and started to crash. Okay, Bitcoin was all the way up at 60,000 in the upper 60s, and we crashed all the way to 28. Okay, 50% crash. So this went from this was basically 50% crash too. So it's tied with the crypto market. But Coinbase did show this bullish harmonic, and we completed the price pattern, ran up past it, and we're back down at 23.6% right now. Pre-market, Coinbase is looking at $263. So we're looking for signs of continuation that Coinbase is going to continue to the upside. And we're very bullish on Coinbase long term. They reported great earnings. Just phenomenal. I mean, their growth is insane. 176% surprise in earnings. So we're not seeing signs that corporate profits are decreasing. Okay, they are increasing. AMC, the highly hyped up meme stock of 2021. Okay, we had this huge 4-hour bullish divergence on AMC. Where we came down, we made a low back in July 19th of this year at 31.24. We bounced up, and we made a lower low, 28.94. But your RSI and your MACD made a higher low. So these move opposite of each other. Those are signs that the price trend is reversing. And we also have a bullish harmonic set up where these numbers are in the areas of bullish harmonics. They don't have to be exact numbers. Okay, they can be they can be in the ranges. And this bullish harmonic, it looks like it's playing out where your first price target from this low on AMC at 28.70, your first price target is up at 41.13, okay? $41, and your second price target is A of this bullish geometric harmonic pattern, $46, okay? We're showing the harmonic pattern, we're showing 4-hour bullish divergence. Your 61.8% retrace is at $55.92. Okay, so the golden section, we haven't made a price trend up. We bounced up to 38.2, and then we crashed back down, right? So we're looking for signs that we're going to, these are the signs that we're going to continue on up. Now, today's Friday. Friday is always a highly volatile day, right? And there's 5 minutes till market open. So we're looking for signs that that is going to continue on. Okay, Hedera had its previous all-time high of 45 cents when we crashed to 13 cents. Huge freaking crash. Okay, and we bounced back up to 23.6%, and we're up here. We haven't quite reached this golden section up here, so we're looking for prices to continue upward on Hedera to move towards 61.8% of 33. So you could enter in here at 23, 22, 23 cents and exit at 33 and make a small short-term profit. Or keep it long-term, make a long-term profit where we know that cryptocurrency is going to continue in price, especially as such an asset as Hedera. Bitcoin is continuing to make movements back to the upside. Your moving averages are crossing each other to the upside. Okay, we're in the golden section. We're at 50% right now. So we're at 46,000, where we bounced from 28,000 to 46,000. And we're in the golden section between 38.2% and 61.8%. We haven't bounced up to 61.8%, which is 50,500. Okay, so psychologically, we have to break 50,000 anyways. But if we look left, where did Bitcoin previously run up to, right? From 28,000 all the way up to 58, and then we crashed between 43. So this was a sign of support. We went up, tested it again, and we failed, crashed, and we're coming back and testing this area. That's where we're at. So it's kind of like a heartbeat, you know? This is your equilibrium line, your support. Right here. Okay? Boop. Up, down. Boop. Now your RSI is high. That's good. That means that the stock or the asset, okay, Bitcoin, that means that the coin is has strength, okay? We're making moves to the upside. Now this could be this could be where we're at 50 cents or 50%, and then we fail and go down to the 38.2 again, and then we bounce back up. But we have this huge bullish candle. This green, huge bullish candle. Where we went from 44 all the way up to 46,000, okay? And ding, 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 market is open. Okay, we're watching Apple, SPY, Grow Generation. We're watching all of our main stocks and popular stocks. Okay, so Apple. Okay, we opened at 149. We made a high so far of 149.24. We're on the 30-minute chart, a shorter minute time frame, and the RSI is looking pretty high up here. So we could see on Apple where we come down to these levels in the short-term levels cool off a little bit, right?